Well, it just got confirmed. Cue the fire. More banks face collapse. Actually, 190 banks are in trouble, and this guy is not going to fix it. Actually, they just keep putting more nails in the coffin with a 1/4 point raise. Congratulations. Cue the fire a second time, Jerome. And I just want you guys to understand, when you wake up in the morning, you're like, hey, the stock market isn't at zero. Bitcoin isn't at zero. That does not mean that it's not headed that way. We have contraction cycles and we have expansion cycles. We are currently in a contraction cycle. Also, a lot of leverage and a lot of debt being taken out by a lot of zombie companies that are going to be paying the price. Well, because debt just got a whole lot more expensive. And when you have to roll over your debt and you're like, wait, imagine your house. If we could just take this and make it personal. You're like, oh, okay, you're making a $3,000 a month payment, and then all of a sudden it goes to $6,000. You're like, we're going to have to sell the kids. I mean, they are just a complete drain on the finances. I went over it. I looked at spreadsheets. There's no benefit. Also, you must be terribly confused when you're like, oh my gosh, the Fed rose rates by 1/4 point, yet interest rates crashed today. Well, not necessarily crash. I mean, your 2-year yield down over 3% today. This is so confusing. I thought they just rose rates, but rates have been coming down. And if you would like to know why they're coming down, that is because the bond market over the last year has been signaling everyone that a tsunami, a gigantic tsunami, is going to destroy everything. We have had a yield curve inversion, a euro-dollar inversion. Everything is inverted to the likes of never seen before. And if you're like, I'm so confused, here, I'll show it to you. It's also why you can see a S&P 500 shedding off 50% of its value, which I'll get to that in a second, because you want to see this. Animate. Okay, on this side over here, you see this right over here? These are yields right here. And this, see this line, how it's going it's going like that. If it does that, here's the stock market right here. What happens to the stock market after you have a yield curve invert like that, which that wasn't even that much. Here, I'll move it to now. Also, you might want to have locked in. I nailed it. I got it last night. Locked in almost 5% on a 6-month. But it's not 12 months, but whatever. All right, so after this happens, a stock market crashes. Do you see how the curve goes back the other way like it should? Yay, everything's healthy. Pile back into the market. Everything is great until it inverts again. And the market still went up though. That's confusing, Bravo. Yes, that's sometimes what happens. And then it crashes again. One side all the way down to zero, which, in my opinion, you're going to see something like that play out once again. And just in case you wanted to know what it looks like now, it looks like this. We have never in the history of yield curve inversions seen anything like this. Bravo, the market is going up today. Yes, I know. Trade the charts. But look. 2-year yield now is at 5%. That thing is falling off a cliff, and that is what Jerome follows. Also, in these times, you're going to need to have wisdom as what to do with this stuff, which this isn't even money. This is just sheets of paper. This is more so money here. You need to know where to move this stuff, because you're like, but Bravo, you said, no, I didn't say. Bravo, you said 50%. So I shorted the S&P 500. No, this is what Jeremy Grantham is telling you that it could. It's just probabilities, 50%. And I can show you the yield curve. I can show you the market, what had happened previously, but we're intraday. We're coming in and we're getting out. And if you have any of your money in the banking system, you better have some wisdom of getting out, because it's going to get very bad. And it's not just with 190 banks. It's with all banks. And let's say you have over $250,000 just sitting there in your account. Anything above that, sorry, not secured. So that's why I tell people, call your bankster and say, hey, I want a six month treasury. I want a bond thing. Something like that. A T-bill, something. You got to beat the banks to it because that's what the banks do. You go, you deposit your said digits, your money into the bank. They just buy bonds. And the bond is protected. Well, I mean, for as much as it's protected. Silver, it's protected. Look, oh my gosh, I own money. So when there's bank runs, oh, still here. Or Bitcoin, it's still there. It will never go away. But you just need the education to know, okay, and it's sorry, you guys, that it's work. Money is, because the system that's set up, it's a debt-based system, you got to constantly move it. And with the right knowledge, you can get pretty darn close of win the top. Let me turn on my Lux Algo. For those of you that are still hodling, you're 2 days past the 9 and you're in Lux Algo. You should take your profit. Financial advice, wait for a said pullback and then re-enter. Also have a very strong resistance at 29 and you have a stronger resistance at 30. Those are just levels. Now, if for some reason you find support at 30, okay. But Bravo, I don't care about that stuff. That doesn't even exist. Okay, the Dow. Last week I said this would be your pain trade. You're like, no, I don't get it. All the banks are collapsing and yet it's going up. I know. Didn't you learn that lesson a few years ago, right? Exactly. Same thing. Swing trade above the 200. There's the Bravo 9. If you'd like to know how to do this, link in the description. This is just a very simple swing trade. That's it. You move money in, you move it out. Look, going back here, you see, it goes up, it hits its head on the 200, it comes down. You swing. Comes back up. Okay, here we go. Here's your next swing. Now we're above the 200. And you actually played out pretty darn good on this little triangle formation, right? Price target, right on target. You get in, you get out. And the Qs even had a bigger one. Also, so what was I saying? 60% off my swing trading course, start there. And then you can go to my bear market course. And then if you really want to like put some pantalones on, try the crypto one. But as soon as you put them on, someone's going to pull them off because crypto is very difficult to trade. And if you're super new and you're like, I'll just take all of them. It's $199, 4 payments, 4 courses. You get everything that I got forever. Then you could make sense of everything for yourself. If all this is in your head, you can see stories and you go, I'm not buying that. I'm just looking at the charts. Even though the stories are great, it's more of a macro pull back. What's going on? I'm telling you, there's a cliff over there. I just don't want you falling off of it. In flashing red alert for stocks. Again, that does not mean hold bags. You're getting in, you're getting out. For the first time since Lehman, 5 ominous signs, these are events, all hit at the same time. And I'm pretty sure you want to know what they are. But I'm pretty sure if you've subscribed to this channel, whoop, hey, look at that. Thank you, Skylar. Like right on target. But can Skylar do fire? Oh, he can do fire. Can he turn me off? He can turn the fire off. S&P 500 forward earnings declined relative to 3 months ago. The yield curve is inverted. Yeah, you could say so. Unemployment is below average. U.S. manufacturing, it's under 50. Manufacturing PMIs are below 50. That's a contraction. You guys want to see contraction? Just wait. More than 40% of U.S. banks on net are tightening lending standards. You want me to show you how tight? Well, tighter than me and my booty walking through a prison shower area. All right, look, this. It's like what we just had. Banks are like, clinch. They're not lending. Just like, oh, wait, they're not lending. Look. See, I can almost get my finger in there, but it gets cut off. But the moral of the story in this is an economy is about debt. I know you hate it. I get it. I didn't create it. Debt, loans, that's an economy. And how money is moving around, which it is not. Actually, it's the worst I have ever seen in my life because this chart goes back to 70. So 69. That's worse than me. This is it. I have never seen a contraction in the M2 money supply. Jerome, you did it. Well, you want to know how to fix it? Do what you were doing in this system. I know. I know, I get it. I hate it. And I know a lot of you are like, just burn this sucker down. You say that now until it's all burnt down. And believe me and you when I tell you this, it's really bad right now. Again, it's a tsunami. You can't see it. It's like, I don't know, a meteor comes down and goes into the ocean, creates a huge tsunami. You don't know it, but the bond market is telling you something is coming. It hasn't hit the shores yet, but we can see from the banks running to the discount window, right? You like that? That the banks are tumbling and they're running to the discount windows. They're running anywhere for money. And this actually needs to be updated. This is the FHLB. I don't want to go into this, but it's going to be bad. Actually, they haven't updated it since the last year. This blue line is probably going to beat that line. Oh, and also, I got this little glimpse into Bloomberg Law, the FHLB, so many acronyms. System raises almost $100 billion in what? In debt, in bond sale, exceeding target. Like I said, that was March 13th. You want to see that chart? Through the roof. Everyone's going to come out and say, we got this, right? The Fed, Jerome's like, it's all under control. Yap, yap, yap. You got nothing, man. All we have is bonds, debt, leverage, shell games. Janet over there, her hands are now tied. Jerome's sitting there like, we got to keep this thing a-going. But they just want to see how far they can take it until it breaks. Sorry, tsunami's coming. And the banks are the first ones to let you know. Actually, they shouldn't be toppling as quickly as they are, but that is the system we are in. Also, if you could do me a favor, if you've learned anything, all these charts, all these things that I've just showed you, if there's one thing that you're like, I didn't know that. I'm thinking there may be more than one. Yeah, maybe a like button. I mean, I can't push it. It's on your side. I mean, did you learn one thing, 2, 3, 4? All right, now, again, waking up in the morning, hey, the stock market's not at zero. Bitcoin's not at zero. There's a timeline in all of this. It takes time. Key events in financial crisis. I have to go back a few years just to show you. 2007, housing crisis deepens. We have February 27th, mortgage giant Freddie Mac says it will no longer, right? That's when you're like, wait, that's what we're seeing now. Banks are like, we will no longer. All right. Then April, subprime mortgage lender, New Century Financial files for bankruptcy. Oh, everything's fine. And then we move to July. So do you see April, May, June, July, market goes up, market goes down. Investment bank Bear Stearns liquidates 2 hedge funds because of those risky subprime mortgage loans. Then August, and then 2008. Bank of America, the big, do you guys see? It takes months, if not years, for this tsunami to play out. Then a year or whatever later, okay, the Federal Reserve agrees, 30 billion, Bear Stearns, right? 30 billion, which is nothing now compared to today, which they're like, we got this, we'll backstop that. FDIC, you got everyone? Okay, what'll fix the problem? Oh, if we just raise the 250,000 to 350, that'll solve everything. No, it doesn't. That doesn't solve the main problem. And actually, you would have to pay that back either A, in your taxes or fees, FDIC, whatever. Anything that they do, it's on you. No, going from 250 to 350 to 450, and they don't even have the money. Come on. What shell game are you doing here? I mean, too bad. Could you imagine if people knew what is in my head? Trust me, you wouldn't be having your money in the bank. Well, I mean, you would, but it's complicated, right? Hey, I need it moved into bonds. I need gold. I need silver. I need Bitcoin. And then I sit there every day and I swing trade. And it's a lot of work. But I do what I do. I do it for me and I do it for you. And I'm like, hey, you want to come along? God, there's just so many things. You need to have this stuff in your head. Like, you go to these channels and they're like, gold, right? Hyperinflation, buy my gold. Give us a call. We'll sell you gold. But what do you need to know? You need to understand things like, which I think gold's going to rip higher over the next year or so. But that doesn't mean buy it right now. Because you need to know what that pattern is. That's called a double top. Now, that does not mean that it's just going to sell off. But you should, again, take my bear market course. These things need to be in your head. What is a double top? Double top is an extremely, this isn't even like little bit, an extremely bearish technical reversal pattern that forms after an asset reaches a high price 2 consecutive times. Would you not agree? These are 2 consecutive times. So in the short term, I think we have a run to the downside, but then it's going to break that and gold is going to rip your face off. But now all of this got really complicated in your head. You're like, well, is it going up or is it going down? Well, right now, it went up today. But big picture for gold again, 30 years of central bank gold demand. You guys want to see something kind of cute? Here's your pullback macro. All right. Governments and everyone from around the world are accumulating like crazy. Do you see what happened? This was 08. I'll move it because I know. Because I've been owning it, trading it, moving it. 08, contraction. After 08, 09, 10, everyone's like, maybe the central bank thing, maybe America doesn't got this. But maybe these two want to come after what we got. And they know, well, let's just say if we have all the gold, maybe we can make all the rules. And as this article goes on to say, China gives U.S. advice, right? To shape new world order. So to conclude, I love gold, but again, I paper trade. That's what we do on this channel. I paper trade gold. I own it. Same thing with silver. Same thing with Bitcoin. I mean, it's everything. And I want to be in charge of all this, not these guys, because these guys they just yap their jowl. But please come along with me in this journey. Most important thing is education. And that's why I taught university. Taught high school, taught elementary school. They didn't really like me, but Actually, they said I was a horrible high school teacher too. I'm like, no homework, no tests, just listen. Oh, also, you got to start a business in my class and make money. So congratulations to all my students that became multimillionaires, which I think my top was about exited at 300 or 400 million. Congratulations, Movement Watches. You buy something from China and you sell it to Americans and have them make it. Poof, money. Or actually, one of my other students sold her notes for. It was nursing, multi-millionaire now. And to think I got a course on that too. But again, you guys, that's the only thing. You start a business. This is a big water bottle. I know, I drink a lot of water. Start businesses, okay? Make money. What do I do with that money? Well, okay, you swing trade, you learn how to trade, and you grow it. And then at the end of the day, you don't have to go clock in, clock out. That sounds horrific. Even though I work every single day of my life, I love doing it. I love hanging out with you guys. This is such a joy, and I can actually do it wherever I want. So do not think that, once I retire, I think the death rate's 2 years after you retire. Set that one aside. Start businesses, hopefully passive. Trade equities if you think it's fun. If you don't, just occasionally swing trade. Maybe like S&P 500, the Qs, DIA, just on the monthly. You change the chart on the monthly, MACD crosses, you have confirmation, you're like, okay. Or just throw your money into the bond market, 5%. Okay, all right, is that enough for you? I mean, that's not like a gigantic home run, but it works. But at the end of the day, you guys, thank you for hanging out with me on this channel. I love you guys, and I will see you tomorrow.